Nobody knows what Burry sees, just as in 1999 and 2008, but the world is about to awaken soon. Michael Burry revealed a shocking revelation in one of history's most shocking crises. According to Burry, the theater took more than a decade to become crowded. Most people probably don't graduate in under a year. Millions of people filled the theater over a long period of time, but the collapse happened quickly and painfully. Unavoidably, some people will fall behind, and it will be their fault for not catching on. Investors around the world will still be in for a rude awakening, even though the warning signs have been present for years. Unsurprisingly, prices increased due to the Federal Reserve printing $5 trillion. This has led to an increase in inflation, which is currently 5.3%. Burry disagrees with the mainstream media because he believes short-term inflation will decline. While it's true that during the pandemic, the Fed printed at a rate of $1.5 trillion annually, the opposite is now happening. At a rate of $1.1 trillion per year, the Fed intends to reduce the amount of money in circulation. It makes sense to assume that prices will decline once the Fed stops printing trillions of dollars, because they did so after prices increased. Supply chains are catching up to demand at the same time that this is taking place. Over the past few years, supply chains have been under pressure, but this is beginning to change. The pandemic has not been allowed to spread unchecked around the globe. We are inclined to adjust to our environment's changing conditions. There are now new supply chains in place. The efficiency of businesses has increased. More container ships are being built. The panic over the supply of goods is in full swing. According to one shipping analyst, 13 additional container ships were ordered last week, bringing the total for the year to 239 ships. Despite the fact that it is only halfway through the year, this year's container ship orders are already the fifth highest on record. It is obvious that such an increase cannot continue. The size of the outlook, according to another analyst, unquestionably causes concern. The rise in inventories indicates that there is a rush to produce supply. Over the past year, wholesale inventories have increased by 24%. The issue with this newly discovered supply is that consumer spending has decreased. The Michigan Consumer Sentiment Index indicates that consumer sentiment has reached a low not seen in 1.5 decades. Prices will inevitably fall quickly when there is an abundance of goods and little consumer demand. This is known as a supply glut when there is an excessive amount of supply in retail stores and not enough demand. Retail stores will have to start lowering prices by implementing mass sales due to an excess supply. Burry's prediction that Christmas will arrive early in July reflects this. Every year, businesses produce excess goods that result in sales, which benefit in revenue, which predicted that Christmas would be early in July 2022. It's not a good reason. Overstocking products causes a significant decline in corporate profits, resulting in job losses or salary reductions for employees. Burry elaborated on this idea by stating that the Bullwhip Effect is responsible for the supply glut at retail. The Fed then reverses course on rates and implements quantitative tightening as a result of deflationary pulses, from this leading to disinflation and CPI later this year. This causes those situations to repeat in cycles. An increase in demand can lead to the Bullwhip Effect, where suppliers order an excessive amount of product. It's because companies frequently order a small quantity more than is necessary as a backup supply. This would have the drawback that the supply can become unhealthily inflated when a network of businesses all place extra orders. Retailers, wholesalers, and manufacturers are typically included in the supply chain. Burry is aware that the impending supply glut will trigger deflationary forces and disinflation. When the rate of inflation sharply declines, we experience disinflation. Therefore, contrary to popular belief, inflation will soon slow down instead of continuing to rise. The Bullwhip Effect's impending disinflation may cause the Fed to resume printing money, or quantitative easing, as it is more commonly known. A new supply shortage will result from quantitative easing, increasing consumer demand. The Fed will then begin quantitative tightening, also known as pulling money out of the system, to stop inflation due to the supply shortage. The only issue is that retailers will order excess inventory once more, resulting in another bullwhip effect. Prices will fall if there is an excess supply, prompting the Fed to resume quantitative easing. A supply shortage would result from this artificially raising consumer demand, which would only pave the way for another bullwhip. Fearful because it keeps the economy mired in cyclical downturns. Such a cycle is present in the economy. As a result of the fact that we are currently in the bullwhip phase of this cycle, we will soon witness one of the worst crashes in recorded history. Regardless of how well known it is, the bullwhip effect is always a result of human nature and cannot be avoided. In his explanation of the bullwhip effect, Burry said, different verticals in the economy are going through various phases concurrently. Investors in fundamental equity, however, rarely focus on more than one vertical at once. Burry is essentially advocating a severe bullwhip on the economy as a whole. By extension, the bullwhip is not limited to traditional retailers like Walmart and Target. Other industries, from the manufacture of planes to cell phones, could also be included in it. In a tweet, Burry stated, January 1973. Johnson died. Foreman defeated Frazier. Roe v. Wade 2. As cyclical inflation lowered the purchasing power of the dollar to only 35 cents, Dow Jones reached its all-time highs between 1966 and 1982. Now 10 cents. There was never a deflation to undo that. Prices fluctuated sporadically as a result of the bullwhip cycle. However, there was a final price spike at the end of the cycle that lacked a corresponding decline. Although prices fluctuated, they ultimately ended up being higher over time. Burry's tweet included a graph depicting the level of inflation during the 1970s. The way amply illustrates the bullwhip effect that the inflation rate was cyclically fluctuating, as is very clear from the graph. As inflation continued to rise over time, the bullwhip effect grew steadily larger. Throughout the entire 1970s, prices dramatically increased. Because inflation remained noticeably positive, it never decreased again. The inflation rate experienced during the most recent spike never returned to the 2% level experienced during the first bullwhip. The CPI news this morning was so terrible that it altered the bond market's perception of the Fed's trajectory and caused the weakest sector to collapse. Mortgage-backed securities went no bid, as it is said in the bond industry, meaning they had no buyers. Normally, bids and asks are used in financial markets. The difference between the ask and the bid is the price at which sellers are willing to sell their goods. The difference in the two prices, as a result, creates a spread. Afterward, a market maker like Citadel will buy the asset at the asking price and sell it at the bid price, effectively profiting from the spread. There were no offers for mortgage-backed securities in June because inflation was so high. It indicates that buyers of mortgage-backed securities, which are bonds backed by mortgages, were literally willing to pay nothing for them. Inflation is most likely to stay, which is a terrifying signal. It's because, despite the Fed's efforts to stop inflation, not everyone is on the same page. Californians will receive inflation relief payments, according to a tweet from Burry. Giving away money for free is absurd because it will only increase inflation. He made fun of California's actions by remarking, "That is not how this works. Nothing in this works that way." Despite the fact that the economic climate is clearly frightening, there must be hope. Are we certain that Bitcoin is not just another risk asset in the NASDAQ 100? Burry tweeted in response to a graph displaying the relationship between the NASDAQ and Bitcoin. Bitcoin is not an uncorrelated asset, as evidenced by the substantial correlation between it and the NASDAQ. Bitcoin is just another tech stock with a new name, as evidenced by the fact that its price fluctuates similarly to the NASDAQ. A recent rally may be seen as a sign of recovery by some. Burry is aware that market crashes are when short-term rallies occur most frequently. Having the biggest rallies during market crashes may seem counterintuitive, but history has proven that to be the case. Remember that there were 10 rallies above 10% from 1929 to 1932, with an average of 23%. 16 rallies above 10%, with an average of 23%, occurred from 2000 to 2002. Thus, there are numerous 10 to 25% rallies after each massive multi-year crash that occurs each year. These rallies, though, shouldn't be interpreted as a sign of a sustained market recovery. Rallies over the short term are useless in a bear market. What preparations is Burry making for the impending crisis in light of the foregoing? No matter what they say, people are only bluffing for attention if their actions match their words. Burry is undoubtedly living up to his claims. We have reached the end on this one. See you at the next one. Cheers.